Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Well, good morning, everybody. Welcome back to another live stream here. We are tuned in for the big one. It is NFP day. And on today's stream, we will be watching, reacting, and reviewing the jobs number. And more importantly about the jobs number, what it actually means for markets. Now, I know that if you browse through YouTube right now, you probably see 15 different streams that are going up and they're going to, trade the reaction to the news. And I will warn that if you're looking for more of a purely technical analysis based stream where, all we're doing is charting, this may not be the stream for you. I just want to warn you. But if you want to actually understand NFP and interpret what these numbers tell us about the markets and a little bit of technical analysis dashed in there as well, then this is the stream for you. And I want to ask you real quick as we get going, hit that thumbs up button, subscribe to the channel if you're new, and let's go ahead and jump in. We've got about 10 minutes to go here before the number actually releases. And I've got a lot of charts on my watch list here to go through. Let's actually start with the dollar index. The dollar index continues to be strong, it seems, as the new year has changed pace a little bit from where we left off in 2023. The question, however, is this set to last? And I think if we start out by taking a quick look at price action, here's the daily chart. Daily chart has been in an overall downward trend. And I think it's worth mentioning, guys, that, despite this dollar rally, we still have to kind of look at it for what it is. It's a move higher in the context of what has been a really dominant downward trend. And so my thought process here when looking at the US dollar is I am looking all over the place today for possible rejection. Now, this is why I said this stream is not purely technical. This stream is going to be fundamental and technical because we're going to look for rejection, not in just pure price action. We're going to look for rejection in the jobs number itself. Today, we'll be reacting to what comes out on the job statistics. We're looking at the number of jobs that were added, the number of people who, the percentage of people that are filed for unemployment. Did that number go up? Did it stay the same? Did it go down? Because those clues are the clues that are filtered into the fundamental story of the market. And if we can kind of understand what this jobs market is looking like here for the US, it can tell us a huge number of things about where markets could be set to move next. Now, on the contrary to my idea here, you always have to ask as a trader, how am I wrong? Where am I wrong? And what do I do if I am wrong? Well, if I'm wrong about this dollar index idea, potentially topping out around where current levels are trading, around 102.65, give or take, The question then becomes, what do I do about it? Let's say that the number comes out just red hot. And noticeably, let's say that we get lots of jobs added, unemployment doesn't tick higher, and at the same time, we get wage growth that is pretty meaningful. Well, guess what? That US economy is looking real strong, and we actually could see the dollar index push higher. And that actually could end up being a negative thing for stocks. Now, I'm not saying all good jobs is going to be good for the Nasdaq, the S&P, et cetera. If you're an index trader, if you're like myself, you're looking for jobs numbers to actually hold in there and look pretty good. What you're not looking for is wage growth. If people across the board are getting a lot of wage increases, that right there is inflationary. And we don't want to see inflation increase if you're an index bull, because inflation increasing could mean the Fed does not cut rates anytime soon. It could actually push back its estimates. That is what we are really looking at today. However, price action standpoint, drop it down to the 4-hour chart with me here on the dollar index, and we can see that again, price has been pretty strong. I mean, look at the dollar index. We've seen, to the bulls' credit, some pretty impressive rallies higher here in the last few days. And again, starting off 2024 with a strong dollar. The question, however, is this going to last? And I think that if you're a bear, you're looking for failure here. You're looking for rejection. You're looking for breaks of these key levels. I'm watching specifically in terms of a lower time frame view. I'd be looking at this 102. Can we crack back underneath the 102 levels after tagging and testing 102.8? If you're a dollar index trader, if you're watching the dollar in any capacity, whether you trade gold, indices, or FX, this chart is really meaningful here today. We're going to watch, in fact, if we do get some more rejection here, or if we actually break out. Real quick, what do you guys think? Comment down below or comment in the chat here. Let me know, are you guys dollar bullish or are you dollar bearish? In fact, maybe I'll throw a poll out there. Do we have, well, actually, you know what? Chandler or James, whenever you guys are here, if you guys want to drop a poll in the Telegram and just let me know when it's ready, that'd be awesome. But the poll of the day should be, are you bullish or bearish on the USD? Because it is a huge day in jobs department world. So we'll be watching that close. Next up on the list is going to be gold here, guys. Gold has been really struggling with all of this dollar bullishness. Of course, if the dollar strengthens, it makes the commodity more relatively expensive to that stronger dollar. And remember that a lot of buying of gold is done internationally. And so if the dollar is more expensive relative to other currencies, it makes gold more expensive as well. And more expensive can also mean less in demand, right? So here's the thing. The idea is gold cannot seem to find a series of higher highs, higher lows like it was trading over here. And if you've been watching me recently, I'll point out where I was wrong. I thought that this would continue its trajectory into the new year. We haven't seen that. So I took a long trade on gold over in this area. I was stopped out. I am still bullish. However, I'm looking for a sign of a change of pace. Now, let's say I'm actually right today. Now, of course, I'm not betting the farm on what happens with the jobs number. That I think is irresponsible. I'm not going to be trading the spike. And if you're looking for me to trade with buy stops and sell stops above and below price, total gambling, likely to blow your account. Please do not do that. I know a lot of traders fall into that trap thinking, well, hey, price is going to go up a super amount or it's going to go down a super amount. So let me just put a buy stop order and a sell stop order and I'm going to be printing free money. But the reality is, let's say the market shoots up. Here's a warning to everybody who is thinking about doing that today and why you absolutely should never do that. If you try and put a buy stop on price and you think you're going to get filled at that price, then you don't quite understand how brokers and spreads actually work. A brokerage widens their spreads tremendously in the minutes leading up to a big NFP event. They know the market's going to spike a huge amount. It's not that they're working against you. It's that they're not trying to put a massive amount of risk on their books. If a brokerage filled everybody into buy trades here and the price was instantly up here, guess what? They're going to have huge, huge losses on their books. They don't want that. So what do? They hedge their own positioning by widening the spread. And that's why when you try and put a buy stop on price here, you actually get filled here, right? So if price doesn't immediately continue higher, you are instantly in a huge loss. Does that make sense? real quick, let me know. Actually, real quick, we just put up the poll. Thank you, Chandler, for that. Join the Telegram if you're not already in there. Drop your vote on today's poll, whether you are bullish or bearish USD. We'll get those results back to you guys here on the show in just a little bit. We are coming into the final stretch here, 4 minutes to go before the NFP number is out. I'm very, very excited to see what this tells us. Unlike, a lot of traders like to completely avoid news days. I love them because news days give me something to chew on as a fundamentalist. I love getting new numbers because it tells me, how are things forming? What's the fundamental story shaping up to look like? And that is, of course, why we watch these streams so closely, or watch these events so closely on stream. Gold, again, can't seem to find structure here. It seems to continuously have struggles. 2050 now acting as resistance. As a bull, I am looking for these levels to break out before I can actually look for bullish setups myself. Hopefully that makes sense. We'll continue on to the next chart here. Chart of the day, S&P 500, struggling at support. I was a buyer here, so this is a little bit of an issue for me, but I mentioned in my initial my trade alert that I shared out that this was my first attempt at S&P bullish setups. If this in fact holds, then great, but it's not looking very promising as we speak. The next question will be if we get a deeper pullback. My next level is not until we get all the way down to 4,600. And so if this level breaks lower today, like if we decisively are lower by the end of the day, then I am absolutely bearish until we get down to like 4,600. So I'll be watching the S&P close here today for sure. So NASDAQ, kind of same story. NASDAQ, I think that if you do get a continued pullback, I'm actually definitely looking at this as a possible buy. 16,000 would be an area of interest for me personally. So I'll be watching NASDAQ as well. Like I said, overall, very bullish on gold and indices going into this year. But healthy pullbacks coming in, and I'm actually glad to see that. We talked about the dollar. Let's take a look at some of the dollar denominated things. Let's take a look at the euro. Euro here, daily chart, still strong overall, pulling back and sitting nestled in at support. The question today will be, will this support hold on the news number? Again, we've got 2 minutes to go, so let me not forget about this. Jobs number will have huge impact on this. Let me go ahead and set up for the news so I do not get left behind here. I have been known on streams to get caught up in a train of thought, and then the number just spikes in front of me, and I'm like, oh, whoops, sorry about that, guys. So we're going to set up the dollar index. We'll put the S&P bottom right. We'll put gold bottom left. We'll put the euro dollar top left, and we'll put the dollar index top right. We're going to go into full screen here so that we can see all of the charts best as possible. I'll keep all 4 on the screen. And again, I am most interested in seeing what these numbers actually are. I'm not looking... most traders during a news event, they don't really care about what the numbers are. They just care about the price action spike. I think the opposite is more important. This is what actually is moving that price. Sometimes people say like, oh, fundamentals are lagging and they don't matter. Then why do they spike price so strong? That's your proof right there why fundamentals matter so much. They spike the market massively. So, a support level doesn't spike the market by itself usually. It's very much a fundamental catalyst. And that's what we're looking here today. Again, guys, we've got a huge number coming out in just about a minute. Please be careful. Please do not, over leverage. I know a lot of people are tempted to make very, very rash decisions on days like NFP. So that's the reason why a lot of people don't trade it, is because they make gambling-like decisions. But we'll be watching it here. Again, do not go away. A lot of times people leave right after the spike. Like I keep saying, the opportunity of NFP is not the spike, it's the aftermath. And that's what we're going to be getting into here in about 30 seconds. We'll be taking a look at that. But again, all of these charts we will loop back to. We'll talk a little bit about gold post-reaction. We'll take a look at the S&P. I am looking to see if we can get a hotter jobs number. But more important for me today, I'm really watching this wage growth number. This is what really matters to me, is the average hourly earnings. Does that tick higher? Does it stay the same? Does it tick lower? And that's what the market is likely to look for as well in relation to the Fed. NFP coming in, breaking news. Let's see what we got here. And gold dropping, euro dropping, dollar jumping, S&P down, lower here now. Dollar index trading higher. S&P bouncing, but gold dropping still hard. Euro still, look at that drop on the euro. That is an impressive drop there. Let's see if we can get some numbers in. We're still pending. There it is. Non-farm employment change, hotter than expected jobs. Unemployment rate actually went down, and the average hourly earnings is up. Ooh, this is actually a little troublesome for the markets here today. This is looking a little bit like a hotter than expected economy read. And why is that bad for stocks? Well, it might mean that the Fed's chances of rate cuts in March were a little bit presumptuous, a little bit optimistic. And if that is in fact the case, that's why we're seeing stocks drop. That's why we're seeing the dollar index jump a lot. And actually, that might have been a key breakout for dollar bulls here today. So let's go take a look specifically at the dollar index and see how price is looking here in the post reaction. So again, that level of resistance that we were looking at, not seeming like it was going to hold here now. So big push to the upside, and congrats. If you are a dollar bull, then congrats. It's a nice move. I mentioned, and I'll stay true to my game plan. If this level is able to close above this level of resistance, I think there's a good shot that bulls have control for a short period of time and could actually extend up to the 104 level. But we're watching the candle here. This candle, by the way, will go down to like an hourly candle. I think watching this hourly candle and seeing how it closes will be very telling. So if we can get a close on this hourly candle above this key level of resistance, that's going to be short-term very bullish, I think, for the jobs. I'm sorry, for the dollar. Again, resistance breaking out. I would say it is sort of confirmed if you get a closure above this level, because of course this could wick back the other direction. But from what I'm seeing in the jobs number, this is looking pretty, I would argue, pretty strong for the dollar in the short term. Let's break this down. Let's talk a little bit about this number and why it is so significant and why the dollar is moving higher. So we'll keep it really simple, okay? The number of people that got, or the number of jobs created was higher than the forecast. So jobs growth, really good. And then the next one is people who filed for unemployment, or the unemployment percentage here, 3.8% was what was forecasted. That was actually expected to go up. And we got a flat read, meaning unemployment did not go up. So it was better than forecasts. And finally, guys, you have average hourly earnings up to 0.4% month over month compared to 0.3%. People are getting raises. Now you might say, oh, that's great. That's great for the people. And for the people who got raises, and of course, that's great. But for the actual read on the economy, that is showing a strength in the economy, but that strength is not good for the Fed's mandate of wanting to get inflation under control. If average hourly earnings are growing, that is inflationary. Remember, inflation is the idea that prices are going up. If everyone's getting raises, that contributes to prices going up. That's not what the Fed wants to see. And that's, of course, why we're getting a little bit of a reaction here to the upside on the dollar index. Now, again, spiking above resistance, the question will be if we can actually hold that. Yeah. So all this does is make everything vague. I think actually this is okay. I still think, here's the thing. I want to show you guys a piece of data. And I think that this is a very valuable resource for us to mention. If you look at the AAII Investor Sentiment Survey, this is outlook on the markets. And it tells you very clearly what investor sentiment actually is looking like. Now, why does this matter? Well, look, in the last few weeks, we have gotten really, really bullish. In fact, if you check the yellow line here, this is the bullish percent minus the bearish percent. And this is a survey sent out to investors. And what you can see here is that we got incredibly optimistic, incredibly bullish. And this latest data, I actually get nervous when the crowd is getting too bullish on something or too bearish on something. That's a little bit of a scary thing. I've been actually wanting to see a pullback in the NASDAQ, the S&P, because I am bullish, but I don't want to be a buyer when absolutely everyone else on the entire block is. If that makes sense, or I think that will make sense with a lot of you guys. Like if everyone is bullish, who's left to buy? That's the question to ask. And so today, I think you're getting a little bit of a rebalancing act. Yes, of course, this is not what the market wanted to see, and it's a negative thing in terms of like stock market sentiment, or perhaps if you're a gold bull, these are not things you want to see. But perhaps for stock market sentiment especially, it's going to be nice actually to see a little bit of a bearish case come back in. I like there to be a balanced market. I need buyers and sellers so that the market isn't just straight up and I can't buy it. Hopefully that makes sense. But yeah. Here's the thing, gold is trading lower. This is a pretty aggressive sell here today, and it kind of justified, right? If the dollar index is getting that strong because essentially we have a really strong labor market. Remember, guys, that gold, it often trades off of fear. And if people are employed and the economy is looking strong, that fear is not there, right? So here's the thing. That is a very clear and simple explanation for why gold is trading lower. And I'm feeling decently good that at least I didn't take buy trades here, right? I am bullish overall gold, but today's number, today's news, and this price action completely are keeping me out of what would be a drawdown on this particular side of the market, right? So definitely interesting to see. We also see oil trading kind of flat on the day. Dollar index, again, coming back to this one, big shoot to the upside, holding gains so far. Here's a look at the euro. Euro is trading lower, of course, off of this strengthening US dollar, and the pound also doing the same. Pound back down to support, guys. Here's if you're a pound trader, looking at the 4-hour chart, key level of support is back in question. And, this does ask the question, I guess, where does this thing want to go from here? Does it want to actually break underneath? And if it does, we could slide much further, I think, for the pound dollar. Short term, like I said, this dollar index is looking strong now. I am not a bull. I want to be clear. I'm not just changing ships just because. But however, I do think that it is worth mentioning when you are when you're wrong about a level. I thought we would get more reaction from this. We did get some reaction, so I was right in thinking we would, but I was, of course, wrong in the sense that we didn't hold that level very long. So I think short-term dollar bulls have control. And I mentioned off of the daily chart that I think that they could, if they close this candle strong, especially on the daily, we could see a squeeze higher on the dollar, perhaps up to like 104. Real quick, I want to also take a look at yields. Yields are coming higher here. That would tell you that bond market stuff is selling off today, which is a very interesting move. The 10-year is back above 4% just slightly, and US 2-year is trading at 4.46. So really interesting moves here to start the day, and perhaps a little bit of a short-term reversal happening on the dollar index. Definitely interesting move to watch out. Okay, let's go take a look real quick and see what the top setups on the EDGEFINDER are looking like following this number. Again, really interesting stuff out of today. We see bullish. Let's actually go. We'll take all of the readings from the EDGEFINDER's algo except for bullish and bearish setups. What we can see here is that we're getting some very bullish readings on Euro Kiwi and Euro Aussie. At the same time, you're getting US 30 still bullish overall, oil still bullish, but noticeably US 30 is the only one left on the bullish reading of the US indices. Very interesting there. Oil getting a bullish read, Euro CAD, Bitcoin, Euro Yen, Pound Aussie, Euro Pound, UK 100, Euro Dollar. We're gonna have to look at that. Although I don't like the price action as we stand. This is looking a little tough today, but we'll look for possible reversals. That might be worth thinking. Aussie Kiwi, Aussie Swiss. All right, these ones are your bearish reads. So not many bearish reads, but a lot of bullish reads across the board here on the EDGEFINDER currently. Of course, if you're not familiar with what this is the EDGEFINDER. The top setups algorithm basically looks at a collection of market data, everything from interest rates, labor statistics, inflation. I mean, labor statistics we just talked about all over here. Trend, economic stats like GDP, PMI numbers, seasonality, retail sentiment, COT data. What the EDGEFINDER does, it's like a brain that takes all of this data in, interprets whether it's bullish or bearish for the selected symbol, and punches out its general view on that particular asset in question. So what that does for me as a trader is every day when I get to the office, I sit down and I say, hey, what's on the EDGEFINDER today? And if I like the setup from a price action standpoint, I have a trade that is actually, looking at lots of different data on my behalf. And I find that to be incredibly useful. And that's obviously why we've built the software. If you're not familiar, our company A1 Trading builds tools for traders. And if you're new to the streams and you'd like to access all this data, we have COT data coming out later today. This gets you a look at what institutional money is buying and selling. What I find interesting here is that here's a look at the latest money flow. So this is week to week what we saw on particular currencies and commodities as well as indices. So we saw like the CAD, the ZAR, Swiss franc kind of being bullish. Same thing with yen, by the way. And dollar was actually bearish in the last filing. However, I want to clarify for those of you who are newer to COT, but you like the idea of tracking institutional money, this is real smart money, right? This is actually tracking data points of smart money, not guessing based on candles, not guessing what's going to happen based on what we're seeing. This is straight up from the CFTC, right? This is data from hedge funds, from banks, institutions. What are they buying? What are they selling on a week-to-week basis? That's the power of the COT data, and we have that data right here for you. So no guesswork, no guessing which candle is institutions doing what, but rather the hard numbers in front of us. So in this case, we can see the net positioning of institutional money on a long-term basis. I like to think of this first chart as our long-term bullish or bearish view on something, but then this money flow is actually more relevant to traders, right? Because as traders, we're looking to see where money is moving in the short term, where money is flowing in and out. And we, again, get the latest money flow data here. We get the latest update to the COT data today. So this afternoon, COT data will be coming out. I've got two things for you. If you want to go ahead and get access to the EDGEFINDER, if you've been watching for a while, we currently have a New Year's sale going on. And if you shoot us a message, you can find out all about the huge discount that we're throwing. Today is the last day on that. So heads up, if you have not already gotten a copy of the EDGEFINDER with our New Year's sale, we'll drop a link here in the chat really quick if you'd like to get a copy of this on the super discounted rate, as well as we'll drop two links. We'll drop the link if you're just a fan and you just want to get it while a discount is still available. Take advantage, shoot us a direct message here. And as a backup, if you'd like to try out the software, we're going to drop another link here in the chat for you. This will set you up with a trial. So if you'd like to get a trial of the EDGEFINDER before you buy, you can also do that. We are working through trials as fast as we can. We're really overloaded based on since the last, couple weeks we've been in and out of the office due to the holidays. We're very backed up on trials, but if you'd like to try it out, click this link, fill out the application form there, and you can check out our software and give it a shot before you actually purchase it if you'd like. So we can also see a quick look at retail sentiment here or positioning today. I think that this could be very useful. Retail trading money seems to be very bullish on dollar Swiss. And that's, of course, giving us a contrarian bearish signal on dollar Swiss. Aussie dollar giving us a bearish reading as retail traders are seemingly more on the bullish side. Dollar yen, retail traders very short. On the euro dollar, we're mixed. Pound dollar, we're mixed. Kiwi dollar, we're mixed. Dollar CAD, we're slightly bullish for retail, but overall pretty mixed. We can go ahead and add in, by the way, we can look at gold. Gold and oil. Oil, retail traders very long. That's a little skeptical, so that's why we're getting the bearish read. At the same time, you got a mixed read on gold. So retail positioning not telling us too much on that. By the way, guys, we added a new chart here, the seasonality scanner. This is huge. The seasonality scanner allows you to look in terms of this week versus next week or this month versus next month and scan all of the different assets for their historical averages in the last 10 years. And I'm going to go ahead and make this edit. This is it is the 10-year average. I just want to clarify that for people who are using this. I just realized that I forgot to put that on there, but we are good now. 10-year average. So this is looking at 10-year historical averages and saying, what has gold done this week, next week? And it does this every week automatically. Again, this is the power of data. It's at your fingertips anytime you want it. But there you go. Dollar index, we'll check up on the price here. Coming back in. What was a big pop above is now reversing a little bit here. We now see the S&P 500. We'll take a quick look here. 4-hour chart still looking ugly. Not too pretty there for sure. As you can see, price is still trading below support. We have the NASDAQ doing the same thing, still in a sell trend, it seems, on the 4-hour chart. Can't seem to find any sort of bottom at this time. The Dow even coming down 0.44%. You've got gold still struggling, but finding perhaps a bounce point. Again, if you are wondering if the gold market is bullish, my opinion, as always, with all of these streams and videos, these are my opinions. I can be totally wrong. And if you watch me long enough, I promise you, you will see me be so dead wrong sometimes, and everyone else you follow. The point is, markets are hard to predict. The question is, will gold actually show signs of a reversal? And what I'd be looking for would actually be the same thing I started out saying in this stream. Can we get above 2050? That's a big question. It's a big ask for the bulls right now. Bulls, can you get us above 2050? And if we can, then we start to potentially make back some progress on this big drawdown, this big drop that we've seen on gold. So for gold bulls in the room, that is what I am looking for. You could make an argument, oh, well, if it holds support and we wick off the bottom, sure, that is true. But for me personally, I will be looking for a higher high on the 4 hour. So I'm looking to break this structure. That'll be personally where I'm looking to potentially get involved on the long side when it comes to gold. So that's my take right now when it comes to the metal. Same thing. Silver, kind of same story. Silver just getting devastated. And the thing is with silver, if you ever want to know something about silver, in a real metals market, bull market, silver outperforms, but it usually follows what gold is going to do. Like, it seems like what happens is that gold will determine like the overall market trend of metals, but silver is like a leveraged bet in some cases almost. So we'll see. I definitely don't think silver is looking too bullish just yet. I'd like to see if that can actually hold. Same with gold, right? If we can actually get some higher highs, higher lows, that sort of thing. But again, the net sentiment of the day, I think, is very bullish for the dollar in the short term. As again, we saw data points that the dollar bulls, this was a pretty much a nice hit for them, right? You had higher jobs than expected created. You had unemployment rate tick lower, stay flat compared to going up. And at the same time, you had wage growth increase, showing that businesses and the economy seem strong enough to actually hand out raises to employees at a higher rate. Now, again, I like to always clarify that. We're not betting that we want people to not get raises. Raises are great. However, raises are also inflationary. Remember that inflation is all about prices going up. If everyone's getting a raise, they can go spend more and prices go up again. We don't want to see a repeat of 2022 where we entered into an inflationary environment and it turned out to be awful for stocks, gold, etc. So we'll be watching out for that close. Actually, gold did just fine in 2022, but that was partially due to geopolitical fears, Ukraine, Russia, etc. So let's keep an eye on some markets here. In just a moment, by the way, guys, we're going to bring in Kenzo. It's going to be good to have him back on to the show to react a little bit on the fundamentals and technical side here. So what we'll do is we'll just take a quick break, thank our sponsor of this show. We do rely on our sponsors in order to make this financially possible, but the sponsors that we've picked have some awesome offers for you guys, tons of free stuff, free resources, and great discounts. So check this out. We'll go to the sponsor, and then we'll come right back with Kenzo to take a look at gold, indices, NASDAQ, whatever he wants to look at. So we'll jump in just a sec.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, and we are back with Kenzo for Fundamental Friday is what we like to call it. Hey, Kenzo, how's it going, man?
Hey, how you doing, man? I'm doing great.
I'm good, and it's good to be back with you. It's been a few weeks since we've done a stream together. Since, of course, we had the holidays, and I hope you spent some time with family, got away from the charts a little bit. As we enter the new year, of course, there's always that kind of lull period during the holidays, but markets are definitely moving again here. Kenzo, what is your reaction, I guess, so far to today's NFP number? Kind of wild price movements.
Yes, yes. We can see that NFP is pushing up, but it's not really that aggressive. I see that the number, everything is up, or unemployment rate, everything is very nice. Wages are going up also, but not really surprising, as it was November, December. So companies were hiring very nice. So I don't think we're gonna see the same thing next month. I think things they're gonna go a little bit lower. Or also, when the market opens, I don't really see the market continuing with that strength of NFP. I think things might reverse. But maybe smaller movements might be fine. As you know, the market has been pushing up for quite some time, so that reversal it was needed. I can also see here, or you can also see here on DXY. I think the market tried to break that, and it seems like now it's trying to push the lower side. I think when the market opens, we might start to see those pushes. But for now, the market is still reacting to NFP. But it's not really a bigger number. I think the difference between this number and last month, I think, is only 16K on the employment change. So it's not really that aggressive.
Yeah, that's a good point, and I think that what the market is looking at here too, at least from my perspective, Kenzo, is I was really watching out for the average hourly earnings, and that is a little bit disappointing as an index bull, because again of the point I've made a couple times on stream today. This average hourly earnings, this is people's getting wage increases, and wage increases
Yes.
is actually quite inflationary. If everybody is getting more on their paycheck, they have more to spend, prices hence go up. And that's been the whole point. That's been the whole problem for the Fed to solve. And so I think that what is a little concerning for me here is that, the people are employed, jobs are being granted, and wages are going up. And the issue, I guess, supposedly there would be that, if you take that at face value, that's a little troublesome for the indices. However, there's another side to this, Kenzo, that I think is really important to mention. Over here at the turn of the year, there was like
Yes.
nothing to stop the NASDAQ bulls. There was no concerns. The Fed was talking about rate cuts. The economy was hanging in there. Companies' earnings were better than expected in many ways. Forecasts were just fine. And the issue with that is that when everything is so perfect, Kenzo, it actually becomes like it's hard for me to buy anything, because it's like the prices are so high and everybody is so optimistic that one little change in the narrative can change everything. And that seems to be what we're getting now. A little bit of concern that perhaps prices were overextended, and that rate cuts, while they still are likely to come, it's possible that the market got a little too excited about it. So I actually am liking this in terms of an index position, to give me those pullbacks that I've been looking for. So I'm glad to see some pullbacks on like the NASDAQ. Of the indices, which ones are you watching going into 2024?
Yeah. Nasdaq is the one, and I also liked that pullback. To me, I was waiting for the market to reach this level, because we never had any proper reversal. And I think just because this NFP is not really that aggressive, I think we might start to see another push to the upside. So yeah, to me, I'm expecting to see a continuation of that uptrend. I don't know if maybe they will still entertain the thing of cutting the rates, but I think they're gonna stick with that. But I don't really expect it to happen now. But that is something that is still going to fuel the market to push on this uptrend.
Yeah, and I think that's worth mentioning too. Even though you're seeing some bear case come back into the market, it's not that the bull case is dead. It's just that now there are bears at the table. And I think that's actually you can visualize that. I pointed this out, especially in particular respect to the stock market. We've got this new indicator that's pretty cool. It's the AAII investor sentiment. This is, of course, a survey sent out to stock market investors specifically, but it gives us a market sentiment read. And it's very, very useful because as we were talking about, Kenzo, you can see that towards the end of the year, bullish sentiment reached like high levels. And then now we are actually starting to see a little bit of cooling in that. We actually got the latest survey result yesterday. So we're seeing, overall risk sentiment, people are still very bullish, but not quite that 53% or 52.9% bullish reading, and only 20.9% people bearish, the week leading up to Christmas. So I think that this is a useful indicator to keep an eye on. And I actually am glad to see that sentiment is normalizing a little bit. As I mentioned, it's hard for me to be super bullish on indices when everyone kind of already is. I made the point earlier that if everybody is already bullish, who is left to buy, right? You have to kind of have some bears in the table in order to get those nice moves higher. So it will be very interesting to see on that front. What do you think, Kenzo, about gold? This is the next topic I wanted to ask you about. What do you think about metals right now?
Yeah, I think metals. I saw another article about, it's not gold, but I think it was copper. But mostly they were generalizing about the metals, that this year we might see the prices going up, including gold. So I think that might be something. They might be right, because what I see is most countries who are producing those metals, they are also looking for lower rates, and at the same time, most people, they're going to invest in stuff like gold, silver, and the other ones. So I'm still bullish. For now, actually, this year I'm just expecting that to be right, but I'm just bullish mostly. I think even if maybe we don't really see some crazy cuts off, but I don't really see them increasing the rates, and that might be positive for other stuff that go against the dollar.
Yeah, and I think currently the only thing that I see that would be like really bearish for metals would be what you mentioned, a sudden, very high increase in inflation, in which the topic of rate hikes comes back into the scenario. I think that that's not likely to happen. However, overall, I think that the story of rate cuts is still intact. But like I said, today's jobs numbers, a little bit of pushback on that concept. I've got the 4-hour chart pulled up as well, and you can see I'm a little bit more zoomed in. Look at that rejection candle at that 2030 level. Price came right in, or buyers came right in, it seems, and are holding that level. The question now, I guess, for price action wise on the lower time frames here, I mentioned this earlier, if I'm going to be bullish, for me, it would have to kind of actually be able to break and give us a higher high on this 4-hour chart. But we'll have to watch that. But that is a really impressive rally there on gold here, following the news.
And that should tell us something, because most likely when we release the like NFPs, if indeed it was like aggressively negative, most likely we see gold is number one to react aggressively. But now we don't even have an hour after the news, but now the market is bouncing back again. That should tell you something, that people don't really care much about that. Maybe CPI next week might tell us a bigger picture, but I think everyone is so bullish. The bearish that we see now, it's the end of the year. Some people, they're cashing out their cash, billions, by the way. So that should push the market to the lower side. But besides that, I don't really see any aggressive negativity in the market currently.
Yeah, it will be very interesting to watch gold as we go forward. I think there is also something that is worth mentioning. I made a whole video about this, and I think that my video on this topic will come out on Saturday. It's the concept of the Treasury yield curve, and the reason I bring this up is that when you get these these yields, these rate extensions, what has historically happened is to follow there is a recessionary period. Now, however, let
Exactly.
me preface this with the idea that this can take some time to materialize into a recession. And I'm not saying that 2024 we're going into one, but what I am saying is that in the last several occurrences where we've gotten an inversion in the yield curve, essentially saying that people are preferring long-term bonds dramatically more than short-term bonds, when that has happened historically, when we've come back out of that inversion period, we've entered into a recessionary period. In all of these cases previously, 2020, 2008, we had a really big one, right? And 2000, we had the tech bubble that was horrific for the Nasdaq.
Yes.
The point I'm trying to get at with this is that this can take some time to materialize. Just because it becomes inverted does not mean it is instantly going to go into a recession. In fact, the indicator that's a little bit more accurate is when we come out of inversion. And this could actually be an interesting thing. The reason I bring this up in relation to gold is that, of course, recessionary periods can actually be really positive for gold, as fear is oftentimes a strong bullish catalyst for gold going into a recession. So if we do start to see something like that change, and that's why we will be moderating and watching yields quite a lot this year, is that change in pace could be one of those really big risk risk off, scared sentiments in the market. But I don't know, Kenzo, I just thought that chart might be worth mentioning. And look how
Yes, yes.
crazy inverted we actually are right now. And that is, of course,
No, it's
telling.
aggressive.
Yeah, we're in like the worst bond market sell-off that we've ever seen in the U.S. history. So it's historic times for sure.
Exactly. Yeah, and that on that yield, they are not actually good as long, especially when they are lower like that. It doesn't really show positivity in the market, and
Mhm.
that obviously might be an indicator for a recession. Not that it's going to happen, but most likely when we see the market going downwards on treasury yields, especially 10 years, mostly you will hear analysts talking about recession here and there, because that shows that the market is not really, the government, the economy is not really performing very well. So once we see them going down, it means they expect lower interest rates. So at the same time, it means the government is not performing very well. And at the end of the day, maybe that will happen. I don't know if it will happen, but most likely things are not looking good on the treasury yields. But
Yep.
at the same time, it means the stock market might be trying to push the upside.
Well, and also to add to that, Kenzo, there was a comment in the chat I wanted to respond to, that a recession is currently priced in. And to anybody who thinks that, I actually would push back on you on that and say that right now, and this is coming from somebody who is actually bullish on stocks. So I'm not saying that I think a recession is coming. However, as a bull, it's also very appropriate for me to recognize that the consensus is that a recession is not coming. Everyone is not expecting a recession right now. I mean, look at the numbers we just had. Those jobs numbers were strong. That doesn't look like a recession, right? So we're not yet seeing, I think, the real strong signals that a recession is here or is coming, from what I can see. But when that recessionary stuff starts to surface, I think it's very important to be, humble enough to recognize that those changes in the direction of the ship can take some time. And when they do, you do have to be prepared so that you don't get caught, holding the bag on some of these things. And perhaps you can reposition or even look closer at gold. But yeah, Kenzo, I want to thank you for coming on as always for these fundamental segments. I think a lot of people enjoy them. I certainly enjoy speaking with you on these topics. But of course, we do this every Friday. Oh, Kenzo left. He dropped out, I think. I'm not sure where he went. Regardless of whether or not his internet dropped or not, I just want to say, make sure to go show some love to Kenzo. He has his own YouTube channel. It's Extra Hot Forex on YouTube. I think he lost connection or something just there. or maybe he just didn't like what I was saying. I'm not sure. But if you'd like to help out the show, one of the ways you can do that is actually to support our guests. We appreciate the commentary that they bring, and the different thought processes are, I think, really good for the conversation. So make sure to support our guest Kenzo. He comes on every Friday. Definitely very, very good stuff from him. Stock market seems to be rebounding a little bit here. Same thing with the NASDAQ shooting back up a little bit. Dow making a bit of a push. The dollar index giving back those gains. And remember, guys, this is why I like to talk about candle closure. Look at that dollar rejection. We'll have to take a closer look at that. And in just a moment, I'll have some help from my good friend and coworker, Frank. He's coming on in just a second. You guys know him, you love him, and he'll be here in just a second. But real quick, we'll run a quick break, come right back. It'll be 30 seconds or so, and we'll be back in the saddle with Frank to take a look at this post-NFP reaction. Attention A1 Trading Show fans. If you're looking to connect with other traders around the globe, consider joining our Discord community. Inside of the group, you'll be able to join our chat rooms, check out our educational material, our coaching webinars, and more. Within the group, our top traders share their trade alerts, which will send notifications to your phone or desktop whenever we take a trade. Our trade alerts come with entries, exits, and full analysis with every trade shared. This is not a blind copy signal service, but instead offers an educational way of looking over the shoulder of our experienced team. For fans of the show, we're offering major discounts for a limited time. To claim your discount now and join the group, click the link that's just been dropped in the live chat, which will connect you to one of our trained support reps here at A1 Trading. Again, click the link that's just been dropped, or find the link in the description of this live stream, and you'll be connected with someone right away. Now, back to the A1 Trading Show. All right, and we are back. Hey, Frank, what's going on, man?
Hey, pretty good. How are you?
Pretty good. So this jobs number, what are your thoughts on this? Because I'm a bit confused at this reversal that we're seeing on the dollar, but was there something I missed?
I am still, I would say, bullish, just because, so NFP beat, and earlier in the week I was saying good jobs numbers is good if we can see, a halt in inflation. And that's what wages did today. They stayed at 0.4% month over month, and they haven't really moved too much for the past several months. So I think better jobs numbers is good for obviously for the economy, but for the stock market too, as long as inflation is not moving. And that seems to be the case for now. And I'm not necessarily overly bullish or bearish on this, but I still have my bullish bias on the markets. And up here is wage growth. You see the past several months have been either at 0.4, 0.2. So really not a lot of movement. Overall trend of wage growth is declining, though, which is what I think the Fed wanted. NFP is kind of doing the same thing. This is over the span of 1.5 years or something like that. So still kind of the same trend. I think it was a decent number to be pumped out today, and I'm not really changing my thesis about how I feel about the markets. So one thing I do want to mention, though, is I did get stopped out of gold, and I do want to reattempt at a long trade, just because of just how this bounced right off that trend line, and the 4 hours looking kind of strong. So I'm going to keep looking at gold, and especially if you can't really tell if the recession has been priced in or not in the stock market. For gold, it's kind of different. It's kind of bullish in both of those ways. So like whether the Fed decides to be more dovish, it's going to be good for stocks and gold. But if there is a recession that's still looming, if there is one that has yet to come, gold is still that long play. So I still like gold. If it breaks under this trend line, though, it's going to be tough to, keep looking for long plays until you get down to like the 1970s, which is under the 2000 mark. So I think for now, I'm going to keep looking at gold long plays and focus on that more.
Frank, you made a point there that is perhaps overlooked sometimes, but so important. I pulled up a chart to try and help, because you made the point perfectly. But for those of you who didn't quite grasp what he was saying in the visual format, this might help. Okay, so if there's a recession, inflation likely comes down a lot, right? Unless you get, of course, some geopolitical thing that spikes the price of oil massively or something, and it's not, if the inflation rate keeps coming down due to slow down in the economy, then that would be great for gold. What you need to understand is that gold actually does well in a disinflationary environment. So what Frank, you pointed out so rightly, is that if you see a recession, inflation is going to keep coming down. And if you see a soft landing, meaning the economy hangs in there, but inflation does continue to cool down to that 2% target, both of those scenarios are bullish for gold. And I guess where you have to always ask yourself is where can we be wrong about that idea, or where can that be broken? That concept, anything in markets, any game plan can have a weakness. The weakness, I think, for gold would be if from here you actually started to see inflation rise, meaning if the economy is just so airtight and the Fed needs to actually come back and talk about rate hikes again, that would be super bearish for gold. So Frank, you're dead on with that, with the recessionary fear or the soft landing situation. Both of those, I would say I'm in the same camp. Gold looks good, and I like your trend line point out there on the technical side. So gold, definitely an interesting one. I have another question too for you, Frank, on the COT data. Of course, we get this later today at the end of the day when we're about heading out of the office. We'll get the COT data. Is there anything that you're looking closely to out of the list the most?
I guess I just want to see a continuation of, I guess, what we're seeing now and maybe some minor changes. I like seeing the dollar sold, and then I like seeing, more risk on pairs on the long side. So we got AUD, CAD, Swiss, which is a risk off pair, but I think as long as we see dollar being sold, I'm gonna still have my bullish feeling on gold and the markets, and seeing that US 30 is still being bought up a lot. NASDAQ is moderate, but I want to see more risk on assets to the long side and more dollar sells.
I think that's something also that you point out when we have streams and we talk about COT data. You always make that point. I think it's good that you're looking for the risk on collective to look good, not necessarily just one or two of the symbols in this list. So what I mean by that, and what Frank is talking about, is when you see the Canadian dollar and stock market stuff, and basically the risk on related assets, when they're doing well in terms of institutional money, like buyers from the institutional level are coming into those assets as a collective, that can be a really bullish signal on market sentiment. Again, because these are the professionals and what they're doing with their money. So if they're going into riskier stuff, that's a good sign for risk appetite. And if they're flowing into safe stuff and away from risky stuff, that can be a pessimistic sign. So definitely a good point on the focusing on kind of a basket of risk on versus risk off assets rather than just one or two. Cool, Frank, that's all I'll keep you for. I know we got a lot of projects going on right now, so we'll let you go. But thank you for coming on to the show, giving us a little reaction to NFP, as well as a look ahead to the COT data later on today.
Yep, thanks.
See you, Frank. Okay, cool. So yeah, again, Frank made a couple really good points there. That's why we bring him on. He is a guy who he has his points he wants to make. He comes on, he gives them to us, and I think it's very useful to the stream. So thank you to Frank. Frank's one of our very own in-house analysts here. Him and myself, we are inside of the Discord channel, sharing our trades. And just a heads up while I'm on that topic, if you guys would like to get the trade alerts being shared within our Discord channel, again, I mentioned that you can get access to all of those trades day in, day out. We're going to be trading probably the post NFP for the remainder of this day. And if you'd like to get access to those trading signals, then you can get them right now for a nice discount. We're doing our New Year sale. Today is the last day. So if you'd like to get access to the New Year sale discount on our VIP signals or our market data, again, we're a software company out of Atlanta, Georgia. If you'd like to get a copy of our tool or get access to our signals, right now we've got a link here just been dropped here. Click this, send us a direct message using that link and ask about the New Year sale. We'll get you a huge discount. And again, this is the last day on that New Year sale. So take advantage, shoot us a DM, let us know that you want access to something. We'll give you pricing details. We'll give you back tested or historical track records of the trades, etc. If that's something that you're interested, all you got to do is just shoot us a message. We'll help you out. Someone from my staff can get you all sorted out with that. So yeah, let's keep an eye on that COT data. Again, we'll have that data later on today. If you're an EDGEFINDER user, just head over to the COT data around 4:30, 5 o'clock. Just depends when the data gets dropped in our software. We'll pull that data in. You can keep an eye on the COT data yourself on your end of the software. Another one that we added recently, I've talked about this in recent videos, is the new smart money versus retail sentiment indicator. And this is pretty cool. If you're looking at something like the euro dollar, this indicator crosses a couple key pieces of information. It crosses the COT data, institutional money, versus retail traders and their positioning. Why does that matter? Well, if you can see what the crowd is doing versus what the smart investors, the smart traders are doing, it's a massive, massive thing to consider in your analysis, in my personal opinion. So if we're looking, for example, at the euro, the one we've got selected, the white line represents the price of the euro. So you can see it's been moving higher. And what has institutional money been doing? They've been riding the trend and getting more bullish. Meanwhile, what have retail traders been doing? As this market trended higher, they just bet against the move the whole time and probably lost a lot of money in the process. We're now actually starting to see something, and this is what I will be looking out for on the COT data coming into today. Are we going to get the COT actually flipping back the other direction on the euro? And we'll have to watch that close because, again, we see retail getting very long right now. And today we'll get confirmation on the COT data. When that data hits the EDGEFINDER, I'll be closely watching to see what they did with the euro and the dollar specifically. I think that actually could be a really interesting thing to watch out for. It might give me some extra confirmation on what I'd like to trade. S&P 500 has almost fully recaptured what it lost here ahead of NFP. NASDAQ, same thing. Dow, same thing. And by the way, gold actually positive on the day, believe it or not. So really crazy. I'm in Atlanta. Didn't realize you were. Yep, we are an office of 10 people in Atlanta, Georgia. Yes, we're software. We're a team of software developers. We of course have people on the representative side to help people with the software and train them, things like that. So yeah, we are. I know from the stream, you can only kind of see me in my office, but we're in a physical office with a team of people. So it's a lot of work goes into these streams, videos, and the software. And I wouldn't be able to do such awesome stuff that we do on these shows without the people that help me to do it. Nick, would your bullish thesis for gold be the same for platinum? I don't really trade platinum, and each market has its unique kind of components. So I can't really give you too much of a comment on platinum. It's not something I follow. If you're talking just generally about metals, I would say that for the most part, a weaker dollar could help to boost metals and commodities as a whole. But we'll see if I'm right about my dollar idea. So my bullish thesis on gold is really rooted in a bearish thesis on the dollar. And I'm actually really I guess, pleased to see that we are rejecting this level after a run above, rejection here. You could make an argument that went to go grab stops. If you'd like to say that, doesn't really matter to me. The point is we've rejected a key level of resistance, and the fundamental story of dollar bearishness overall as a whole is still intact in my view. Despite a hotter jobs number, you're going to have some of that along the way. But I did think that if we closed, I made the point that if we closed bullish on this daily candle that we could make a run back up to 104. It doesn't actually look like that's the case. This is why, you know, I don't try and counter trend trade I very rarely will do it, except for perhaps on a longer term kind of mean reversion trade or investment. But I mean, for the most part, as a trader, I'm looking to trade in the direction of this, and the direction is still overall to the downside, despite what has looked like a strong short-term bullish run for the dollar. If you're watching this 4-hour chart with me, what I'm looking for specifically on the dollar would be breakouts here. Like if we can break that if we can get back into the 102s, that's a really good sign that sellers have kind of taken back control of this market, in my personal opinion. So we'll watch that close. Nick, I consider your channel as a movie, action, comedy, sometimes, and thriller. Comedy? What are you laughing at my losses? No, I'm just kidding. I can be funny, but I can also be cringy. So I kind of like ride the fine line each and every day. It's a mystery for me too, what it's going to be that day. Even before I sleep, I watch your videos, just hear you talking. You know, hey, if I can help you fall asleep, I don't know if that's a positive thing or if I am just that boring, but I appreciate you watching the content. Thank you for the support. Silver, still flat. Gold, flat on the day. I mean, I think that's kind of a win for bulls, considering we had hot jobs. It's kind of a win for bulls. Although, like I said, with gold, I'm very much not interested unless we actually start to see a reversal of this downward structure that we see on the 4-hour. I'd like to see like a breakout, pullback, that sort of thing. Top setups overall. Let's see if we got any adjustments. Yep, euro yen. Let's take a look at euro yen. What's going on with the EJ? Not a pair that I look at too frequently, but the euro is got to get our attention. Look at this. We've got 4 bullish setups. 5. 1, 2, 3, 4, 5 bullish setups. What is it about the euro that is so strong right now? COT is very bullish. Trend. Inflationary numbers. Labor statistics. Let's go look at some euro pairs real quick, guys. We'll start with the big one. We'll take a look at euro dollar, see what's going on. And the question is there some value here? I think that if I'm looking at the daily chart, okay, we might actually have a little bit of a game on scenario here for the euro. Price is holding support. EDGEFINDER gives it a +6. That's a good read. The only thing I'm a little bit cautious about is that we're getting new COT data later on today. So that 3 that we're getting could become a -3. It could become a stay as a 3. But again, we get COT data later on today. For those of you who are EDGEFINDER users, just click on COT data. Watch out for 4 o'clock US Eastern and beyond. That's when things will get updated on the COT side. Nick, did you begin your trading journey studying fundamentals? No, like everyone else, I look for best trading strategy on YouTube, and I watch like 7,000 price action videos, candlesticks, smart money concepts, all that stuff. And I realized that technical analysis is like the simplest thing in the world, or you can make it complex as you want, but it doesn't necessarily increase your profitability, at least from what I found. In terms of all my price action related back testing, what I found is that price action can be kept very, very simple, like simple market structure, simple candlestick patterns. You know, trend lines can be helpful, but I really like horizontal key levels of support and resistance, and then actually combining it with what really moves the market, which is fundamentals. I've had, I'll give you a little secret, guys. Let me tell you something. If you're like watching this channel for a new time or for a first time or a first couple times, and you aren't fully on the fundamentals train, let me see if I can convert you with this. I've had in the past, I did a podcast where I interviewed a lot of different traders, and many of them were big money managers. In fact, I had Tom Basso on the channel at one point, huge money manager, right? So I've had many money managers, professionals in the industry, people with 20 plus years of experience. And you know what I found common trait between the big money managers? They were all very well attuned with the macro, with the fundamentals. You know what all the retail traders talk about constantly? Technicals. Now, I'm not saying technicals are valueless, because a lot of these institutional traders that I've spoken with, they also looked at technicals, but they all were aware of and fundamentally understood, generally speaking, what's going on in the markets from a macro level. And I think that by itself, when I understood that, when I kept hearing from the really smart money players, they understood the fundamentals, and then all the YouTubers, right? And I'm a YouTuber, so I recognize the irony of saying that. The pure, Lambo lifestyle traders, they only ever would show a price action chart. And when I realized that, okay, all the big money, all the people who have credible track records are using fundamentals, I realized that's where I got to be. I can't mess around and take this. If you really think about it for a second, I'll give you a rant, and I apologize for people who are like, can we just get back to the euro? You had a good thing going there. Look, I realized that if it was as easy as a simple technical indicator or a simple technical price action that formed on the charts to make and print endless amounts of money from the markets, everybody and their brother and mother and sister and aunt and dog would be trading the markets. It's not that easy. It's so difficult to find profitability. And I'm not trying to discredit people who use technicals, because I use technicals. What I'm saying is that they're not that powerful. The markets have a lot of noise in them. There's a lot of fake outs. There's a lot of things. And I think sometimes technical analysis can blend very much into chart art, which is just the idea of like, if I draw enough cool, fancy things and make it complex, then I'll find profitability. And I think that that's a mistake that, it doesn't sell well, because I'll tell you what, I'm a content creator as well. I run a business on this stuff. I could tell you that technical analysis stuff sells very easily, but I don't use it as my sole reason for placing money in the markets. And I would not fake that to my audience that that's all you need. I think you do need to understand what moves the markets at a pretty integral level. And that takes a lot of experience and a lot of years. And you wonder, why are markets so hard? Why did it take years to learn? Well, you have to learn risk management, you have to learn technicals, but fundamentals take years to understand. It's not an easy path. And I'm not saying that it is. I'm saying that that's the path I chose, and it changed my trading forever. Once I actually understood why moves were happening, there was so much less. I put out a tweet yesterday where I was like, when people don't understand what the markets say, they just say, oh, it's just manipulated. Actually, if you peel back the onion and you understand the fundamentals, most of the time market moves make a lot of sense. And it's just actually taking the time to learn this stuff. And then you're not shouting from your hip, oh, well, it's just manipulated, and that's why I lost money today. No, you didn't do your research. You don't know the stuff as well as you thought. Sorry for the rant. But I do get heated about that topic, because a lot of people love to just say fundamentals don't matter. They are what move the market. Why did we all gather for NFP today? Because fundamentals move the market. Think about it. Right? You start piecing the puzzle pieces together, and it starts to become really, really clear. Gold moving higher. Yeah, look at this. Sorry for the rant, guys. I do have a poll that I need to go check on. We had someone, or we had Chandler, I believe, put a Telegram poll together for us. If you guys are not in the Telegram, last chance to vote on our poll of the day. We asked the crowd, are you bullish or bearish on the USD? And here's what we had in response. For me, I am bearish. I'm going to click bearish. We had 54% of people said bullish, 46% said bearish. We dropped a link here just a moment ago. If you would like to join our free Telegram, there it is. Make sure to join that if you have not already, for future polls. We put out daily analysis, charts, research. It's totally free to join. So if you're not already in the Telegram, make sure to do that, especially if you did resonate with my rant there and you were like, okay, fundamentals make sense, and I need to embrace that markets are harder than I thought. Then welcome to the red pill side of trading. That's maybe something we should, maybe if I make a podcast around trading, or a show or something like that, I could call it the red pill of trading. I don't know. That seems kind of cool. Yeah. Rusty Soul says, how, as a third world resident, can I afford a copy of the EDGEFINDER? I can do payments of $200. Yeah, we do offer payment plans, especially to people who they can't afford the product outright. We do offer payment plans. If you'd like to speak with a representative on our team who can set that up for you, we have a link that will drop here in the chat. You can directly message someone on my staff. I have 4 people on my staff that help people with the EDGEFINDER payment plans, answering their questions, working them through tutorials, providing resources to help them understand fundamentals better. If you would like a payment processing plan on the EDGEFINDER rather than paying it in one go, send us a direct message. Use this link here. We don't usually advertise that, but for those of you guys who are like, okay, you know what, I would like the software you guys are building. I see the value in fundamentals. Obviously, when I rant about fundamentals, I have something to sell. And I try and stay very transparent about that. But let me be clear that I believe in what I sell, and I believe that it's easier to sell a dream and technical analysis only rather than sell fundamentals. Fundamentals are not shiny, exciting, and easy. So please recognize I'm trying to be transparent and also tell you that if I was only trying to sell, I probably wouldn't focus so much on fundamentals. It is genuinely what I believe to be more important in markets than simple technical analysis. Although I use technicals, I just think there's an importance to understanding the stories. Fundamentals are driven by bonds, then stocks, then FX. Options a much shorter game. That's a great point. The bond market is so underrated in terms of analysis by retail traders. I don't even know if I've ever heard retail traders talking about bonds. And when I say retail traders, I mean I guess like the hype traders of social media. Like they don't talk about bonds because that's so boring, but they're so important to the market. No one likes to learn fundamentals. It's true. It's absolutely true. Fundamentals are hard, they're difficult, etc. I would like the idea of fundamental learning. I would buy this. Connor, if you want access to our software, the whole point of the EDGEFINDER is to help make fundamentals more approachable. It is a product that we have spent thousands of hours collectively building to help traders reach their full potential with fundamental analysis much sooner. But I recognize after doing this journey myself, understanding fundamentals, spending like 10 hours a day at this stuff, plus 10 plus hours a day on this topic, trading, investing, markets, content creation around it. What I've realized, and I'm not trying to gatekeep, what I'm realizing is that that was so much work, and I don't expect anyone to do that who isn't full-time at this stuff. I am full-time at this stuff, and it was still so hard. So what I recognize is that there was a need in the market for people to have access to data that makes that more approachable. And so that is where we launched the EDGEFINDER. I have a background in software, so I have a an upbringing, I guess, in this space, but also, trading plus software. I was like, let's build something that actually helps traders to spot fundamental trends more easily. And that includes, the sentiment of the markets. That includes economic statistics when it comes to like GDP and PMI numbers and today's numbers, which were so important, the jobs numbers, right? We have all of that data approachable in simple format, automatically brought to you. So you don't have to browse the entire internet and read 15 articles a day. That's what I used to do. I used to read articles every day to try and keep up with what was going on. And I said, you know what? Enough of that. Software, pull it in, put it right in front of me every day. Cold J says, Nick, I was a purely technical trader for years until I started watching you started making better trades as soon as I did. That's awesome, Cold J. That's very cool to hear. And I just want to say also, if you never buy anything from my company and you just watch my videos, then I very much appreciate that. And I do recognize that you don't have to pay for anything. You can watch my videos, learn something each day. And I'm happy with that too. Even if you don't purchase from us, hey, you know what? You supporting my channel, I very much appreciate it. Silver, seeing a little bit of love, but look at this, guys. Gold is actually really doing quite well here. The question will be now, can you get the break? 2050, that's the next level, I think. I've mentioned this pretty much all day on stream. Christopher says, hey, even as a scalp trader, I've tapped into your fundamental analysis and made it my goal this year to use it to grow a secondary indices related account. Keep rocking. Christopher, more power to you, my man. And I will say, sometimes and I love this comment from Christopher, because sometimes day traders and scalpers, they'll say fundamentals, they don't apply to me. I just got to read the technical chart. But there is something called today's catalyst for fundamentals. Like there are short-term catalysts. Like today, if you recognized today what happened with the jobs number, and you can spot what that means for markets very quickly, you can still day trade and scalp those opportunities. So I still think they are very valuable. Oh, and Cole J says he also has the Edge Finder. That's awesome. Can't believe it. That's just cool reviews from everyone. Thank you guys very much for the positive feedback. Someone told me today, if you weren't here, someone told me that they fall asleep to my videos. I'm still processing that, if I feel good about that or not. Like, are you saying that I'm incredibly boring and that's why you use it to fall asleep and that you don't actually listen? I listen to, does anybody else do this? I think something's wrong with me. I think I think my brain needs a reset, because I have to listen to something these days to fall asleep. Usually it's something like a history documentary. I love history, or I can't listen to market data though to go to sleep. That to me is wild, because when I'm listening to market data, I am zoned in. I'm like, what are we talking about? And I listen to a lot. There's a wonderful plethora of great creators that are actually, tapping into fundamentals, and I can listen to podcasts and things like that, but I have to be awake for that. I'll actually do that sometimes when I'm at the gym, or when I'm driving. I might listen to a fundamentals podcast or people talking about markets. Means you're boring. You know what? If I'm making a difference in some way to that person's sleeping habits, I guess I'll take that as a positive. What's your take on professional traders like George Soros making 20% profit yearly, while retail traders claim 100 to 1,000% returns on their capital? Wasim, here's the answer. You ready? Ready for percentage expectations per year? This one has gotten me in so many arguments. Well, not really arguments. I've gotten so much flack for saying this in the past, but here's the answer nobody likes to hear. Just like the rest of fundamentals are hard, markets are hard, trading is hard. People don't like to hear that. Here's the answer on returns. They don't show that on a live account. They never will. They never can, because they don't actually have those returns. They have a course on their website. They have something they're selling. There's nothing wrong with selling something, but using this tactic to sell it, absolutely wrong, right? So if you don't have real results to back what you're selling, I don't believe you have a right to sell stuff. That's my take on it. I've been trading for years. I've reached profitability. It was incredibly difficult. And I believe that earns you the right to turn around and offer services and actually, but the crazy thing to me and the sad thing is a lot of people buy from people like this, and those people themselves don't make any money in the markets, and they're just blind, leading the blind kind of thing. And that to me is wrong. Can we go over again why the jobs number pushed USD down? Absolutely, because it's a little bit tricky. The initial reaction. Well, here's what I think you need to understand, first of all, about the dollar index today. You might say, Nick, why did it go down? Well, if you look at a daily chart, it didn't really go down. It just didn't really go up. It blinked higher, but came back down. I think that this is a very important concept to discuss here today. And that's a great question. Thank you for asking, why did this USD go back down? Let's talk about it. All right, so going through the numbers, a couple things to consider here. Unemployment rate was expected to tick higher to 3.8%. We didn't get that. We stayed flat. And Frank clarified something for me that's going to really help in this presentation here. Next up, jobs change. This is probably the strongest of the data that we got today. We had 216,000 jobs created compared to the forecast at 168,000. That's that's actually slightly higher than previously, but it was expected to come down. So jobs were strong, and that is in some cases that is strong for the dollar, right? That should be good. But remember, this is the fundamentals, and fundamentals are hard, and we have to understand the full story. Next up on the list is what Frank pointed out for us, and it was very helpful. Hourly earnings. This is the inflation related, specifically like direct inflationary metric that we want to talk about. if wages are going up, it also attributes more, or it pushes more prices up. If everyone's getting raises, they can go out and bid higher for products, services, trips, travel, everything, right? What we saw is that previously we saw 0.4%. Today we saw 0.4% as well. We were expected to come down. We didn't come down. Now we didn't tick higher. That would just be incredibly bullish for the dollar. But we were higher than estimates. So initially we saw the dollar react very positive to these 3 back-to-back green numbers, all supposedly strong for the dollar. Where we run into an issue is that, and again, I want to remind you that the dollar index right now is not, it's not even bearish on the day. The dollar index is up on the day. So it's not down. It's just flat. Why is it flat? Because the context is key here. The overall story is still intact, that rates are expected to come down, that inflation is not quite where it needs to be, but it's on that direction. And there are still many indicators that are kind of pointing towards economic cooling. And so while the jobs number might have been a little bit hotter than expected, it wasn't a massive, massive number. And the overall story, it's not a massive enough number to change the story. The story is still disinflation. The consensus is still no recession, but rate cuts are on the horizon. And so the dollar upside is in some ways still limited because the consensus is still intact. Now, was I right today about my ideas with the dollar? Kind of right, kind of wrong. I thought we'd get a quicker reaction to the price action level here that we've talked about, 102.5. We didn't. We saw a spike above that level. However, if you listen back on the stream today, we talked about let's watch for a candle closure. And my idea was if the candle closed strongly above, and after processing the data, the market's like, hey, yeah, that's actually a little concerning to the narrative here, we probably trade up into the 104. We didn't see that. We saw rejection here. And so now my bias here, my educated guess is that the dollar comes down. In line with kind of the trend here, the price action trend overall still holding up, the fundamental trend still overall holding up. If you didn't see it, I'd encourage you to go back to where Frank and I were discussing these numbers, and he made some really, really good points. By the way, S&P 500 coming right back up. This is nice to see. Okay. Guys, give me a moment. I'm re-entering a trade. The candle here closed just or is just coming right back up. This is a nice rejection and perhaps a little bit of a fake out. I am back in my S&P trade here. For those in the Discord, if you're a VIP member already, just head over to indices trades. I just updated, same trade, but this rejection, I got to take a screenshot of this because this is looking good. S&P, I'm resuming my bullish setup. Sorry for the sudden stop in train of thought, but I'm going to get back into my S&P trade. So for those of you guys keeping up with the trades in the group, I am okay, there we go. Yep. So back in S&P, question will be now, are we going to get the gold signal as well today? That's silver. Let's go to gold. Not quite yet. Not ready yet. Looking for a breakout here. I did also sell a put on XLE. How is XLE doing today? This is an energy ETF. I sold 82.5 puts. So I sold puts for this level yesterday, right at the close. So we're up slightly on that. That's good. For those of you guys who do not know much about options, I do actually trade options, and I have a it's not really a course, it's just my strategy guide in the VIP group. If you are already in the VIP, by the way, you can go to my options channel. Check this out. Go to the options. Go to the stock trades. Yesterday, I sold a put on oil, on XLE. This is kind of a hedge in some ways. I also just think that longer term, now this is a 1 month in the money put that I sold. I'm sorry, out of the money put that I sold. I'm collecting $1,000 in premium on this trade. And if price sells off, I will be required to buy these shares. Options are a little complicated if you're new to this stuff, so don't worry if that was a little confusing. If you are a member and you'd like to see this, we have a video on my channel, and we also have a PDF variation that you can actually go read. If you're a member, head over to the option strategy. If you're curious, if you have some time this weekend and you'd like to look into options, I absolutely love trading options. It's something that I really only started in 2023. I haven't been doing it that long, but it is very much just an adaptation, really, of other types of trading. It adds another dimension of time decay on options, and it can be a little tricky again for beginners. However, they have some very, very nice trades. I like to sell options personally. For those of you who are familiar, I am an options seller. I'm not really much of an options buyer. I like to sell out of the money puts, cash secured puts, what they call it, or covered calls on positions that I have that I think have limited upside. A lot of words there. If you don't understand options, and don't worry, I'm not trying to sound all smartsy on you. I'm just, for those who know, options are a wonderful thing if you know how to use them, and they can be a terrible thing if you abuse them. Yeah. Don't get addicted to selling options for the premium. It was it's been something that I've dabbled in for a long time, but I really committed to building a trading plan for options and sticking to it in the last year or so. It's been very, very good. However, I am not a fan of leverage. I don't, I don't get lost in the sauce. So my options trading is very, very low risk. Selling options is the only way to go until you get hit. I've gotten hit before. I played the Russell, and it was a rough one in 2023. However, the cool thing about it, so I pretty much sold puts all the way down on this. And I had some pretty good drawdown. If you guys remember, for those of you who saw me have a pretty terrible drawdown last year, if you've been around, you know that this period was really tough for me. Part of the reason for that was that the Russell dropped like 19%, and I was selling puts on it. So it was a painful, painful experience. Fortunately, I stuck to the rules. We came out on top and actually made money by getting nice fills on longer term positions, rode it up, sold covered calls, made money on premium and on price movement overall. It was really nice. But yeah, as long as you're using low leverage, I don't like the idea of buying options, but selling them with, proper risk management can be wonderful. PMI numbers coming out in 13 minutes. That is true. I'm going to try and make it. We got 12 minutes to go. So we've been doing it for an hour and a half. My goodness. This stream has been crazy busy. The math makes sense, but the black swans. Yeah, that's true. I think that the thing is, when it comes to selling options, it's something that I actually don't mind holding if I had to for the very long term. So that's kind of the other caveat with selling options, is you can get stuck with a position for a very long time. You have to be okay with that. And otherwise, stay away. S&P still staying strong here. I'm liking this rejection. Daily chart looks pretty clean here. Let's see if it stays intact for the remainder. Dow, slightly red. NASDAQ leading today's charge. That's interesting. Dollar index, look at that rejection, guys. 4-hour chart, big red candle. Dollar index looking for this move. If this move, guys, happens, my gold setup probably comes to play. What I mean by that is if the dollar drops and gives us a nice break of 102, the gold market probably pushes higher and can clear this 2050 level that I've been talking about. Yeah, so we will keep a close eye on that. Nick, check UJ sell. H. Bala, I know you've been very bearish on dollar yen, so I know you traded it well over here. Question is it time to get back in on that move? I'd say I'm a little skeptical on the daily here. You have had a pretty impressive breakout. However, if you see this level fail, like if you see that move, yeah. Thanks for remembering. I remember, if you're somebody who chats constantly in the chat, I might not see everything you say. In fact, I probably miss 80% of what is said in the chat, to be completely honest. But I do recognize you. It's a numbers game. You keep messaging, you keep chatting, keep hanging out with us. I appreciate you guys who are regular viewers. And I do read the messages. Oftentimes I'll read you guys' messages after the stream. I know that's bad, and I try and do better with it. But yeah. Where can we enter in trades now? Where this is such a jerky thing to say back, but I'm going to say it because it's important. Where does your strategy tell you to enter trades? Genuinely though, like if you're coming to a stream and you're just like, Nick, tell me when to buy, where to sell, be careful, because trading doesn't really work like that. And if you're just relying on someone else to tell you when to get in, but you don't understand risk management or why the moves are happening, it's going to be a tough ride in trading. So I'm not trying to sound like a jerk, but I genuinely mean that. Like I'm trying to give you like a dad joke response that actually has some valid merit to it. When is the trade competition happening? Go to Eightcap's website. There's a, I think the registration ended. I can't actually remember. By the way, guys, I did also want to mention something. We did reintroduce, and we are getting caught up on trial requests for the EDGEFINDER. If you're somebody who's been watching for a while, you don't have the EDGEFINDER yet, we do have a way now to actually get access and check out the software without committing to the full price upfront. If you would like to hear more information about that, if you'd like to apply for a trial of the software, we have a link right here. Try out the EDGEFINDER. Click this link, fill that form out. It will connect you with someone on our staff who can actually get you a copy of the EDGEFINDER to try for yourself. So if that's something that would be useful to you, if you'd like to check out, if you've been on the fence for a while, this is a new way we're doing it in 2024. We do have a New Year's sale going on that's ending today. So if you've been thinking about getting the EDGEFINDER, what you could do today is you could send us, apply to this form. We are trying to get caught up today. So you will probably get a response very quickly from my team to get access to the EDGEFINDER, to try it out. And we can potentially even get you that discount before the sale ends. Nick, check dollar now. Let's take a look. Dollar index. Wow. Wow. Negative territory for the dollar. Again, jobs data was pretty good, but not good enough to change the consensus. I think that that's the summary. That's probably what I'll do in my video today. Recap NFP. Jobs numbers were strong, but not strong enough to change the narrative. Narrative is still disinflation trend, economy cooling, staying in there, soft landing still seems to be on. I think that's a fair summary. So yeah. Again, guys, just 5-6 minutes here to go before we actually get to PMI numbers. 6 minutes or so. What are your thoughts on a 2024 recession? Possible, but not my base case or what I think will happen. 2023, people barked recession all year long. Meanwhile, this sounds so, pat myself on the back, but we were really bullish on indices during last year. And if you were thinking a recession was coming, you were not bullish on indices and you missed out on one of the best moves ever. And a lot of bears on the market last year, they just said, oh, it's manipulated and it's not, it's not a real move and the stock market's going to crash. And here's the thing though, the market was bullish for a good reason, I think. First of all, it was a pre-election year. Second of all, you saw rate expectations steadily throughout the year become more and more likely that the Fed was going to pause and then they were going to cut. And these things are really positive catalysts for stocks. Third, you had earnings from the big companies do very, very well. You had Apple and Google and Meta. Maybe not so much Apple, but a lot of these companies did very, very well in their earnings last year. And that boosted the market out of control. At the end of the day, if you want to say stocks are they shouldn't have made that move, then you have to account for why earnings increased so much and why they're making so much more money. If you're talking indices, stocks move based on their earnings in the long term. And earnings were good last year, better than expected in many cases. Something to consider. If you're going to be an index trader, I would encourage you to look into individual stocks a little bit. I think that, if you're going to trade the S&P, the NASDAQ, it's probably a good idea to just do a little basics and understanding of how individual companies, how they're valued, how price to earnings works, things like that. I feel like that actually could be really beneficial to traders. I listen to a lot of stock market stuff, as you can probably imagine, but like a lot of individual stocks, I don't talk about individual stocks and I don't really trade individual stocks. However, understanding individual stocks, actually, you know what, this is perhaps a good example of me trying to practice what I preach in terms of understanding many markets. I say this often in my videos. Even though you may not trade S&P when I pull it up and talk about it, a lot of you guys, this is awesome to see. A lot of you guys have said, I don't trade those markets, but thank you for covering them. It's really helping me in my areas. And that to me, I'm like, that's what it's all about. Fundamentals is not about one market and only studying one market. Fundamentals is about understanding how all of the markets connect. How do they talk to each other, right? It's so key to understand. So for me, practicing what I preach, what I mean by that is I try to understand as best as I can individual companies, evaluations, bullish, bearish catalysts, earnings. I try and understand that stuff because even though I don't trade individual stocks, I listen to coverage of them to try and understand more every day about the markets. I think that's, for me to say I know everything about the markets or anybody to say that is so foolish because this stuff is complicated. It's very complex. Just follow the most weighted stocks in NASDAQ. I mean, yeah, that's a great place to start, right? You keep an eye on Apple. You keep an eye on this NVIDIA stuff that's going on. If you want to talk stocks, NVIDIA is a very interesting story that's played out. It accounted for a large chunk of the entire S&P 500's gains last year. Job or Job, I apologize if I said your name incorrectly. Thank you so much, Nick, for sharing vital information to trading concerning fundamentals. I probably would have blown 5 other accounts and quit trading. That's awesome to hear. Thank you for the positive feedback, and I'm glad I could help. This gold move makes no sense. I think it does. I think it does make sense. Again, here's a recap. What happened? It's all about the dollar, right? The gold market is moving up because the dollar is moving down. Why? NFP, here's my summary as best I can give it. NFP was strong jobs, good numbers, but not enough of a massive hit for dollar bulls to completely change the narrative. What do I mean by that? The dollar trades based on interest rates. Same thing with gold by proxy, right? By extension, the gold market, because it's quoted in dollars, trades heavily based on what the dollar's doing. Dollar trades heavily based on what rates are doing. Okay. If the dollar index is trading lower, it's arguably because the dollar's had a good run. But this number here today, which was one of the big, holdouts for the bulls, is to have just rock solid, massive hit jobs numbers. We did get a good jobs report, but it's not like a smashing change to the story and to the consensus. So the trend is to the downside overall. The consensus is that this thing is going to trend lower. And today's number did not break the consensus. The dollar had moved higher. It's not down that much. It's actually slightly positive on the day, but it wasn't enough to change the story for the dollar. That's why this move actually makes a lot of sense. And that's why, again, fundamentals are oftentimes more difficult than what first meets. But again, the numbers were strong, but they weren't strong enough to hold that gain and make a significant change in the story for the dollar. The dollar, in order for it to go up, you need to have hotter than expected CPI. You need to have jobs numbers that are just rock solid in every camp. We did see good numbers. By the way, we have 20 seconds here before news. Thank you for the reminder. Chandler, I appreciate you on that. We've got PMI numbers coming out in 10 seconds to go here. We'll see if this does make any tangible difference in the story here today. 15-minute charts all around. Let's have a look here and watch PMIs. Okay, dollar index down here a bit. S&P pumping, gold pumping. Ooh, gold, hello. PMIs likely just came out cooler than expected. Yep, PMIs cooler than expected. Wow, 50.6, slowdown. There is more consensus-friendly data. Consensus-friendly meaning economy is cooling, inflation's coming down, rate cuts are coming. That number right there just helped us with that story. And there goes the dollar. It's fascinating. Markets are absolutely fascinating, guys. But that makes total sense. This move makes sense. PMI numbers showed cooling in the economy. Not actually cooling, by the way. 50.6 is still expansion, just a lot less expansion than expected. 52.5 is a good bit of expansion, the PMI number. For those of you who are not familiar with PMIs, a reading above 50 in the services department or services section is growth, and below 50 is contraction. So we have mild growth. Mild growth is in line with expectations, and actually stocks love this, I think. Let's see, am I right? Stocks are loving it. Still decent growth, but not enough growth to attract the Fed's attention and get smacked back down. Love to see it. S&P moving here nicely for me. By the way, I've got some random singular shares. Whoever signed up with Webull with me, thank you. I got a couple shares here. Actually, this has been like the last week or so. I had someone got me a share of Spotify. That means they also, by the way, if you use my Webull link, you get shares and I get shares. And so whoever did this, that's awesome. Anyways, S&P move nice here. Look at that, pumping. Up about 1,500 on the position, 1,600, 1,700. Just mentioned to members in the group, nice pop so far. I'll trail stops if price is able to begin forming higher highs and higher lows on the 4-hour. But a nice push there. Just under 2,000 in profit right now. Little bit of a fake out there, but daily chart holding strong. Daily yesterday closed at support. Today we wicked beneath and came back strong. PMI numbers here, nice confirmation. I'll actually add that comment. I'm going to comment that real quick. Services PMI came in still showing expansion, but mild. Goldilocks situation for stocks. Not too hot to attract Fed's negative attention. Rates higher, but not too cool to attract bearish attention, recession fears. Does that make sense, guys? By the way, what I just wrote up, type yes in the chat if that made sense for me. Again, services PMI actually had some nice merit to them right there. Services PMI told us that there was expansion, but it was very mild. So the reason I call it a Goldilocks situation, you guys know the old story, right? The girl goes into the bear's house and there's, she keeps going for the not too hot, not too cold soup, or was it oatmeal? What does she even have? Situation, right? Same thing with the bed. The bed's not too big and hard and not too small. So they went for the just right, but it seems like we had a just right number on services PMI here today. Stocks loving it. Great for S&P. We'll stay bullish here until proven otherwise. But again, I got to mark up this level here. Whoops. Staying bullish until proven otherwise. Stops below this low, by the way. Up 2,300 here so far. All right, guys, I got to call the stream. If you want to keep trading with me, I will be still doing stuff in the Discord. But I've been on air for almost 2 hours, so that's long enough, and I gotta pee. So if you guys are not already in the Discord, get access. Come join us. No messing around. When we take trades, live accounts. You can see it on the screen right now. I am logged into a live brokerage. No nonsense. No BS. No fake. Profits, no Lambos. If you want to really trade with us this year, come get involved in the action. Come take your trading to the next level. I promise you it is worth the value. We do not sell dreams. We do not sell fake, nonsense. We're out here really doing this. And if you want a huge discount, today's the last day. So we're doing a New Year sale on the VIP group or the EDGEFINDER. If you shoot us a direct message using this link right here, we'll get you that sale before the sale ends here today. Thank you guys for hanging out with me today. I hope you learned something. I certainly did going through markets with you here today. And cheers. Have a good rest of your day and have a nice weekend, guys. See ya.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. Have a great Happy New Year and trade safe.